All right, welcome to The Explainer. Today, we're diving into something super relevant. How do you invest when the world feels, well, completely nuts? We're going to break down a powerful framework from one of the sharpest minds out there, Li Lu. He's got a way to cut through all that chaos in the headlines and find some real clarity.
You know, if you're looking at the world right now and feeling a little on edge about the economy, hey, you are not alone. Li Lu himself talks about this. He calls it the predicaments of our era. And what does he mean? Well, think about it. Geopolitical stuff, weird deflationary pressures, huge economic shifts happening all at once. It's a tough environment for anyone trying to grow their savings for sure.
So that's the big question, right? When every headline is screaming about some massive, unsettling event, how in the world are you supposed to make a smart, long-term decision about your money? I mean, where do you even start? It's the kind of thing that can make you just want to freeze up and do nothing. But here's the thing. Li Lu, and this is the guy who founded Himalaya Capital, a true protege of the one and only Charlie Munger. He says, hold on, there is a way. There's a way to slice right through all that noise. And it all comes down to one single, really powerful idea that can guide us. And that's what we're going to unpack.
Okay, so here it is, the big idea. It's surprisingly simple. Accept the macro and focus like a laser on the micro. And let me be clear, this isn't just some clever little tip. No, this is the absolute core, the central pillar of his entire way of thinking about investing.
What he's really doing here is drawing a bright line in the sand between what you can't control and what you can. He says trying to predict these massive macro events, geopolitics, global economies, it's a fool's game. Don't even try. Just accept that's the weather you're sailing in. Instead, put all, and I mean all, of your energy into the micro, the stuff you can actually dig into and understand. We're talking about a company's real numbers, its moat, its competitive edge, and who's running the show. That's where you find your advantage.
Okay, that sounds great in theory, but how do you actually do it, right? Well, this is where it gets practical. Li Lu gives us a whole set of core principles that are basically a toolkit for building this value investing mindset from the ground up.
He breaks it down into this 6-step process, and it's classic value investing, straight from the school of Benjamin Graham and Charlie Munger. First up, a stock isn't just a blinking light on a screen. It's you owning a piece of a real business. Second, you've got to use the market's crazy mood swings to your advantage. Third, you always demand a margin of safety, a buffer for when you're wrong. Fourth, and this is a big one, know the limits of what you know. Fifth, fish where the other fishermen aren't. And finally, the whole point of this is to grow your actual purchasing power over time, not just the number of dollars in your account.
Let's double-click on that Mr. Market idea from step 2, because it's so important. Just imagine you're in business with this partner, Mr. Market, and he's totally bipolar. Some days he's on top of the world, offering to buy your shares for some insane price. Then the next day he's in a total panic, begging you to take his shares for almost nothing. Li Lu says, a smart investor just smiles, ignores the crazy mood swings, and takes advantage of the ridiculous offers. See, Mr. Market is there to serve you with opportunities, not to guide you or tell you what your business is actually worth.
And this idea just perfectly highlights the huge difference between true investing and just plain speculating. Investing, that's a positive-sum game. You're buying into a business and you share in the value it creates over time. Everyone can win. But speculating, that's a zero-sum game. It's all about guessing what other people are going to do next. For you to win, someone else has to lose. And as Li Lu points out, you can look at history, the investors almost always win out over the speculators in the long run.
This quote really gets to the heart of another key principle, being honest with yourself. It's what investors call your circle of competence. And Li Lu's take on this is, well, it's pretty brutal. He's saying if you can't draw a hard line around what you know and what you don't, then you don't really have competence. It's about having the discipline, the guts to say, nope, I don't get this business, and just walk away. That's what saves you from the really big mistakes.
Okay, so that's the theory, that's the philosophy. But does the man actually practice what he preaches? Let's take a look. We're going to dive into his actual portfolio, and this is where all these ideas go from abstract concepts to cold, hard cash.
Okay, get ready for this number. 93%. Seriously, 93.
As of early 2025, that's the percentage of his public portfolio that was stuffed into just 5 companies. 5. That is the polar opposite of what most people call diversification. This is the very definition of high-conviction investing. It's what happens when you have a super tight circle of competence and you bet big, really big, only on the things you are absolutely sure about.
And you can see here exactly how that 93% breaks down. It's dominated by just a handful of huge names. You've got Alphabet taking up almost 40% of the pie. Bank of America right behind it at about 30%. And listen, these are not just random darts thrown at a board. Each one of these represents a super deep, long-term conviction in a business he believes is durable and that he understands completely.
And when you look closer at the names, you start to see the pattern, right? It's all about dominant, high-quality businesses. You've got a global monster in tech with Alphabet, a pillar of the entire U.S. financial system in Bank of America. He's even got his mentor's own company, Berkshire Hathaway, which is like the ultimate diversified quality business, and then a more focused financial player in East West Bancorp. These aren't wild flyers, they're bets on established, world-class companies.
Okay, so you might be thinking, that's great for a billionaire fund manager, but what about me? I have a day job. And that's the best part. Li Lu actually has some super practical advice for regular folks like us, people who want to build wealth but aren't trying to become the next Warren Buffett.
His advice for most people really comes down to this: keep it simple and stay out of trouble. He basically lays out 2 main options. Option 1, just buy a broad, low-cost index fund like an S&P 500 fund. You're buying a slice of the real economy. Option 2, if you don't want to do that, find a professional manager that you really trust has a true long-term mindset. And he's got this one really important warning. It's far better to just hold cash than it is to gamble on things you don't understand. The goal isn't to hit a home run every time. It's to get solid, realistic returns, like maybe 6 or 7% compounded over time, instead of chasing crazy high-risk bets that could blow you up.
And that brings us full circle, right back to that core idea. Li Lu's entire philosophy is about one thing: tuning out the screaming noise of the big, scary macro stuff you can't control so you can focus with total clarity on the micro stuff that you can. So the question he kind of leaves us with is a really personal one. In this insane world of information overload, what's your micro? What's that one small corner of the world, that one business or industry that you can genuinely, truly understand? Because finding the answer to that question, well, that could be the start of everything for your own financial future.